1.3 million Americans lost their long-term unemployment benefits yesterday. And the White House says 4.9 million will see those benefits run out by the end of 2014 without an extension. With more on what that means for the economy and more as we approach the new year, we're joined by CBS News business analyst Jill Schlesinger. Jill, always good to see you. So this amounted to $300 a week for these people. What does it mean for the economy?
Without them making that $300 a week, they have less money to spend, and that's not good news for the economy. We're expecting economic growth to expand, let's say, by 2.5% in the first quarter. Well, with the reduction in these benefits, we're expecting that that's going to be reduced by maybe 0.3%. So it doesn't seem like a huge number, but it is impactful.
The markets moved in a huge way in 2013. The S&P was up 29%. The NASDAQ was up 37%. That can't continue for 2014.
We would presume not. But look, there's a bigger picture going on here. Why is the stock market up so much? We just said the economy's not growing that fast, right? So you say, well, what's going on here? Well, the Federal Reserve has kept interest rates so low for so long that investors basically said, I'm getting paid 0% to own an asset like cash or to have a bond. I might as well buy stocks. Since March 2009, when the stock market bottomed out after the recession, we are up about 165%. It has been tremendous.
Meanwhile, the bond market, interest rates are rising. What does that mean?
Well, you know, it's kind of good if you're a saver because maybe eventually you'll get paid a little bit more for the money you have in the bank. It's not great news if you want to borrow money. But that said, interest rates are still very low. We would expect that the housing market is going to see price gains slow down. We've seen amazing gains in the housing market, 12% year over year. I think next year maybe it's 5% because of those higher mortgage rates. But don't get spooked. These are still relatively very low interest rates.
Jill, thank you very much. Happy New Year.
Happy New Year.